Today on iFinance, shocking value opportunity. Let's get to it. So we all know what GameStop is. It's simply a game retailer, and you can go there and pick up video games and other accessories. I think they also sell comic books and other video game memorabilia, type of good stuff if you like video games and that type of entertainment. However, if you look at the stock, it's been getting absolutely destroyed for the past few years. And the main reason for it is because games are now being sold digitally. Now most games are sold simply by Steam or by other means through the internet, basically. This is the so-called transition towards digital sales that has destroyed shareholder value in GameStop for many years now. However, at some point, the shares have to have some value, guys. And I think after going by the numbers, I think there's a good opportunity to make some good value investment here. In fact, I would consider this kind of like the cigar butt approach that Warren Buffett used to use back then in his early days. And on top of that, guys, it pays a 20% dividend. Think about that, 20% dividend. You would make all your investment back in just 5 years. But it gets even better. You see, the company has more than enough cash to buy all of its shares back right now. So it could easily go private at any moment. So what essentially the cigar butt approach is buying absolutely destroyed out of favor shares in extremely cheap companies that are basically free, at least when you consider them vis-a-vis their business prospects. Another great way of thinking about this type of stocks is when people refer to them as deep value stocks. Essentially what it means is that you're buying the proverbial dollar at 50 cents. This is usually a great opportunity for investors, and I think you should look into GameStop right now. But let's get to the key reasons I think you should look into this stock. Reason number one is that they have right now, as of today, $1.62 billion in cash. And if you compare that to its debt, they have about $800 in debt. And if you subtract the debt from the company's cash, you would still have $800 million in cash left. And that's more than the current company's market cap. This is because if you look at the company's market cap, it is roughly $799 million. So what this means is that the company could pay all of its debt back right now and buy back all of its shares easily. Now let's get into reason number two. If you exclude what the company wrote down due to its impairment of Goodwill in last year, the company would have made roughly $297 million in profits. So despite everything that's going wrong with the company, GameStop is actually a profitable business, guys. Believe it or not, this is actually a profitable business that is trading at this ridiculous value. So in other words, it is trading at roughly a 2.6 price to earnings ratio, which is extremely low, guys. Reason number three, if you compare the revenues the company had back in 2009 and you compare them to what it had today in 2019, you will find that the company's revenues are virtually the same. This means that the company has survived the vast majority of this transition toward digital sales. This is because right now most companies already sell most of its games through digital channels. In fact, the split is roughly 80-something% digital and the rest is physical. So if GameStop has survived through all of this, then I think the worst has already passed. Reason number four. Back then in 2009, the company had almost $2 billion in goodwill. And as you know, this type of figures can be written down. And when they're written down, this implies losses for shareholder. However, luckily for new shareholders, if you buy today, most of that goodwill has already been written off. Right now, you would only have roughly $360 million in goodwill, which is a lot less, guys. So even if this gets written off, it's just 1 year of earnings and you still have all the rest of the positive factors I've just mentioned. Reason number five, if you look at the company's total equity, which is the book value, and you compare it to the company's current market cap, it is actually trading below its book value, below the equity, guys. This means that you're, again, another signal that you're buying the proverbial dollar at 50 cents. Reason number 6, there are already funds that are looking into the company as a potential takeover target or as a potential for buyout or a merger or taking it private. So, and all of these possibilities would probably result in you making at least 2 times the current value right now. And the last reason is that GameStop's business is already diversifying from purely selling video games. Now the company is pivoting to esports and organizing competitive tournaments and also other type of competitive video game contests, and it's also focusing on diversifying its revenue streams at different stores. And it's mostly by looking into comics, esports, collectible items, other video game memorabilia, and etc. So that's it, guys. I think I've made a good case for GameStop. Personally, I think I'll be picking up some shares very soon, maybe next week. But tell me, what do you think, guys? It looks cheap, but it can be cheap for a reason. I mean, after all, there are some risks regarding the equity. People are worried about what the new incoming CEO might or might not do. Maybe he destroys value at the company. It can happen. But to be honest, guys, 20% dividend trading at a 2 PE ratio, it is insane. So personally, I think it makes sense to start a small position. I'm not saying go all in on the company. You have a diversified portfolio of stocks, maybe buy a little. Personally, I'm looking into buying roughly 5% of my portfolio, but I'll start even lower than that. I'll start with maybe 2 to 2.5%, something like that. As you know, guys, in stocks, you gotta take it easy. You gotta play it safe. I see a lot of people going crazy, going all in stocks. Recently, I like Tesla, but Tesla is a small position for me. However, I see other people going into margin calls and all that. You don't want to be like that, guys. You gotta take it easy and play it safe. This is a marathon. It is not a sprint. So that's it, guys. Thank you very much for watching. Tell me what you think about GameStop. Let's keep the conversation going. Thank you very much. Have a great day.